Friends, today's topic is assessment procedures. Actually, you are the SSE. You will earn the money. On your income, you are supposed to pay the tax. How much is your income? Let us say our friend income 10 lakh. 10 lakh means it is more than basic exemption limit. So our friend is liable to pay the tax. Yes or no? On 10 lakh you have to pay the tax means first you have to intimate that your income is 10 lakh. How to intimate? Can I do WhatsApp message? Can I send a Facebook request? No. For that purpose, you have to file return, that is known as return of income. ROI, return of income. You have to file the same with the income tax department. That person is known as assessing officer. Those people who will take the income tax matters are called as assessing officer. Now, once you file the return of income, assessing officer will make the assessment. I repeat, will make the assessment. Assessment means normal meaning computation. General layman point of view, assessment means computation. Friends, here assessments are four types. First one is regular assessment. I repeat, regular assessment. Second one is best judgment assessment. Third one is escaping assessment. Escaping assessment. Last one is search assessment. Search assessment. In fact, there are total four assessments are there. First one, regular assessment. 143 subsection 3. Next one, best judgment assessment 144. Next one, escaping assessment 147. Next one, search assessment 153A. So once you file the return of income, assessing officer will make the assessment. How you know? Once you will write the examination, after that assessing officer means examiner will evaluate the paper. That kind of evaluation is called as assessment. After that, you will receive the assessment order. Once you receive the assessment order, you satisfied or not? Tell me. If you are satisfied, keep quiet. Not satisfied, then these are the remedies available. I repeat, the remedies are as follows. Number one, you can go to appeal. You can go to court of appeal. Number two, you can go for revision. I repeat, revision. Or else number three, if in case of any mistake, you can go for rectification of mistakes. I repeat, you can go for rectification of mistakes. Last option, you can go to CBDT, Central Board of Direct Taxes. Friends, these are very important topics. Out of that, weightage is as follows. Only this chapter, filing of return of income, 139, 1 to 148 sections. These sections, as I told you, 143.3, 144, 147, 153A. Once assessment completes, now SSE has following remedies. Remedies means what are the rights he has. Now, number one, appeal. Number two, revision. Number three, rectification. Number four, CBDT. Today, friends, our topic is return of income. Income tax return. Income tax return. Weightage of this syllabus, minimum 4, maximum 6 months. Whereas regular assessment and best judgment assessment, out of that one question confirm 4 months. Escaping assessment 4 months. Search assessment 4 months. Appeal and revision 4 months. Rectification of mistake 4 months. CBDT, they may not ask or they may ask, maybe 2 months. Altogether, I am taking least 4 plus 4 plus 4 plus 4 plus 4. 5 fours are 20 plus 2, 22 months. So I am telling that the chapter weightage, altogether this chapter 8 is minimum 18 marks to maximum 22 marks. Very important. And one more thing, as a chartered accountant, the core syllabus is assessment procedures. Assessment procedures means the procedures adopted by income tax department for computation of income is called as assessment procedure. For that purpose, the first thing is filing of return of income. Filing of return of income. You have to file the return to the income tax department. That topic is our syllabus today. We are going to start. Now first, let us revise what I told you right now. First, SSE has to file the return, that is called as income tax return. After that, assessing officer will verify. After that, will issue the assessment order. After that, you already paid the tax. Suppose you paid the tax 5 lakh. I said, no, your tax not 5 lakh, your tax 8 lakh. Then what is the remedies available? 2. Remedy number 1, pay the tax 8 lakh and keep quiet. Or else, go to appeal, go for revision, go for rectification, go to department CBDT. In certain cases, chalo, this concept is called as assessment procedure. Now I want to discuss return of income. Return of income we want to discuss. Friends, the syllabus is as follows. Number 1, 139.1, voluntary filing of ROI. 139.1b, bulk return or return through employer. 1ba, 139, the index. Friends, everyone, start the index. First, section 139.1, running notes. In the new page, you can write the index 139 subsection 1. Don't write the answer about that. Once you complete, then we will come back and write. We are not by hearting here. We are learning. Come on, 139.1. Leave one line space. 139.1a. 1a. 139.1b. 139.1b. 139.1c. 1c. 139.3. 139.4. Running notes. Next one. 139. 4a, 4b, 4c, 4d, 4e, 4f. I repeat. 139 subsection 4a, 139 subsection 4b, 139 subsection 4c, 139 subsection 4d, 139 subsection 4e, 139 subsection 4f. 4f. Chalo. Next. 139.5. 139 subsection 5. 139 subsection 6. 6. 139 subsection 9. 139 subsection 9. Next, 139 capital A. AA. 139 capital AA. AA. 139 capital B. Capital B. 140. 139 capital A. 139 capital AA. 139 capital B. 140. 140 capital A. 234A. 220. 221. Section 220, section 221. 271F. 276CC. 234F. 272A. 272A. Yes, these are the sections, friends. Okay, chalo. Start. We can start our syllabus. Number one, first section. Our syllabus is 139, 1 to 140A. These are the main provisions. Remaining are interest, penalty, prosecution, like this. One by one, I will start from this scratch, assuming you don't know anything. Chalo. First one, 139 subsection 1, voluntary filing of RY. Please follow. I will give the running notes. First, listen carefully. 139 subsection 1, first section, voluntary filing of return of income. Sir, no one will ask you to come and file the return. Voluntarily, you have to come and file the return. Okay? Like marriage invitation card, I will not ask you. Now, Srilata, please come to marriage of our friends. Tomorrow, marriage is there. I never ever ask like this. Voluntarily, you have to come and file the return. Now, topic, who are liable to file the return? When they are liable to file the return, what are the forms? Can you take the last page of your running notes? Can you file the return? No. One procedure is there. For that purpose, who, when, what? Come again. Who are required to file? When they are required to file? What are the forms they are liable to file? These are the things relevant. Now, first one, we are going to cover who are liable to file the return. Okay? Chalo. One by one. First one, every company liable. I repeat, every company. Wow. Every company is liable to file the return. You. One company is in losses. Yes. One company in profits. Yes. One company just started, yes or no? Yes. Once company means every company is liable to file the return. I repeat, every company is liable to file the return. Every company, if you are a company, compulsory you have to file the return of income. Income tax return you have to file. Even though you have positive income, even though you have losses, even though you have break even, even though you have not started operations, compulsory every company has to file the return of income irrespective of their income. Same way, every partnership firm, every LLP. Tomorrow, if you start any partnership firm or LLP, you are liable to file the return of income irrespective of your income. Friends, irrespective of your income, you are earning more or earning less is immaterial. Irrespective of your income, you are liable to file the return of income. You are required to furnish the return of income. Tell me point number one. Every company. Point number two, every firm or LLP. Chalo, next question. Others. What about others? Others are liable to file or not? That is the point. Number one. What is your father income? Our father income, let us say 5 lakh. Now my point is gross total income. I repeat, gross total income. Friend, what is the gross total income? Before deductions or after deductions? Before deductions. So, total income before deductions. I repeat, total income plus deductions. That gross total income, no. Any person's total income plus deductions means gross total income exceeds basic exemption limit. Friend, what is the basic exemption limit? 2 lakh 50. In some cases, senior citizen 3 lakh. Some cases 5 lakh. If your income is more than this limit, you are liable to file the return. Otherwise, not at all liable. Understood? Fine. Friend, your income 7 lakh. 7 lakh. Are you liable to file the return? Yes. Your income 9 lakh. Are you liable to file the return? Yes. Sir, your income 3 lakh. Are you liable to file the return? 3 lakh. Yes. Suppose 3 lakh. You are liable to file the return. Apart from this, one more person has to file the return of income. That is 4th and 5th clause of section 139(1). Resident, I repeat, resident but ordinary resident. In case of resident but ordinary resident, these people are required to file the return of income if they have assets located outside India. See the word resident. Come again. What? Resident but ordinary resident. If any person is a resident but ordinary resident, as per residential status, persons are two types, resident, non-resident. In that case, the residents are liable to file the return of income. I repeat, residents are liable to file the return of income subject to two conditions. Condition number one, if he held as a beneficial owner of any asset, including financial interest located outside India. I repeat, including financial asset located outside India, he has signing authority in any account outside India. In this case, they are liable to file the return. I will take the illustration. Please follow one by one. Number one. First one, every company over. Second one, others individual whose gross total income more than well is over. Third one, resident but ordinary resident who has assets located outside India. I hope on Facebooks or on social media, so many messages are circulating. The message number one, India has so much of black currency outside India. You heard? Last election time also, Mr. Modi promised that I will bring back 15 lakh, I will create to each and every account. He said like this last elections time. You got the 15 lakh rupees? No. Sorry. First one, if I want to bring the foreign currency, black money from outside India to in India, first I should know how many people in India has assets outside India. We should know, Gada. We should know or not? Yes. For that purpose, they introduced that concept. Resident but ordinary resident who has assets located outside India. You have to file the return of income. Example, I will tell you. You know, Jayalalitha madam, she has hotel in Malaysia. Example, in this case, she has to file the return of income. Actually, she want to take salary 1 rupee per month. When she was a CM, she want to take 1 rupee. Suppose nowadays her income is 0, but she has property in Malaysia. Even though she has not covered under first category, second category, if you have assets located outside India, compulsory you have to file the return of income. Okay, you have to file return of income. Which asset? That is the question. Answer, any asset. Any asset located outside India, you have to file the return. Not only any asset, friends, financial interest also. What is the financial interest? Shares in a company. Share in a partnership firm. I repeat, shares in a company, or you are a partner in a partnership firm. If you have 0.5% partnership also, any partnership firm, you are supposed to file the return of income, even though your income is less than basic exemption limit. Okay, next one. He has signing authority of any account located outside India. The famous thing. I hope everybody in the class they know. Swiss bank account. Have you heard? Swiss bank account. Suppose you have Swiss bank account outside India. you have to file the return of income. Suppose the account is not in your name, but you are the signing authority. You are the signing authority of the return. Yes, you are supposed to file the return of income. First one, if I want to know how much foreign assets we have, first you have to intimate me by filing return. No, that is the reason they introduced this fourth and fifth provision. Resident but non-resident who has assets located outside India. Any asset, I told you any asset, not only any asset, financial asset also. Not only that, if you have bank account outside India or if you are a signing authority of any particular bank account, you are supposed to file the return of income. Sometimes beneficial owner is not there, no more. In this case, beneficiary is liable to file the return of income. Beneficiary, in case of beneficiary of any asset, including financial asset located outside India. I repeat, beneficiary. Student automatically will have the doubt. What is the beneficial owner? What is the beneficiary? Follow, friends. I given the definition here, beneficial owner and beneficiary. Common sense, layman understanding, beneficial owner means those person who invested, those persons who have invested. Beneficiary means for whose benefit the investment was made. I repeat, for whose benefit the investment was made. See this one, individual who has provided directly or indirectly consideration for the asset. I repeat, consideration for the asset for the immediate or future benefit of himself or other self. Suppose best example, your father. Your father want to purchase the property for yourself. Means your father only invested the money, but that is not for your father benefit, maybe for your benefit or for your father benefit also. Those persons who invested the money, that person is called as beneficial owner. I repeat, beneficial owner. Next one, who is the beneficiary? I hope you know beneficiary means who derives the benefit out of this. Individual. I repeat, beneficiary means individual who derives benefit from that asset during the previous year. But consideration for such asset not provided by beneficiary, provided by third party. Okay na? Tell me, who has to file the return of income? Beneficial owner or beneficiary na? Beneficial owner has to file the return of income. But suppose beneficial owner unable to file the return of income. Example, now for example, Jayalalitha, she has expired, died. In case of her dismissal, she cannot file the return of income. In this case, who are the beneficiary? Beneficiary of the property has to file the return of income. Suppose she bought the property in Malaysia in the name of Sesikala ma'am. So now tell me, who has to file the return of income? Jayalalitha ma'am or Sesikala ma'am? Sesikala ma'am has to file the return of income. So tell me, beneficiary has to file or beneficial owner? Beneficial owner has to file. If beneficial owner unable to file the return, then who has to file? Beneficiary. Now these are the points. Friends, so far we covered the topic. Who are liable to file the return of income? Tell me, who are liable to file the return of income? 3. Number 1, every company, every partnership firm, every LLP. Number 2, other than these persons whose gross total income exceeds basic exemption limit or threshold limit or the amount which is not subject to tax. Last number, resident but ordinary resident who has assets located outside India, not in India, including financial asset or having signing authority of any account, he has to file the return of income. Next one, beneficial owner unable to file the return, then who has to file? Beneficiary. Ma'am, you both are liable to file the return or anyone? Anyone. Who can file the return? Beneficial owner, not the beneficiary. If beneficial owner unable to file, then who can file? Beneficiary. What is the beneficial owner means? The person directly or indirectly invested the money for his immediate benefit or future benefit. Who is the beneficiary? The person who is deriving the benefit out of that. That fellow is called as beneficiary. Correct now? Yes. These persons compulsorily liable to file the return of income even though their income is less than basic exemption limit. Okay, chalo. Next question. Friends, now section 147, escaping assessment, there we will cover. In this case, if any resident but non-resident has assets located outside India and not furnish the return of income, not furnish the ROI, in such case, it is deemed that, I repeat, it is deemed that income has escaped assessment. Income has escaped the assessment. What does it mean? You have assets located outside India. Then you have to file the return of income or not? Yes. but you have not filed the return of income. If you have not filed the return of income means immediately I am assuming that your income has not offered to income tax department. Your income has escaped the assessment. Then I can reopen 147 and I will do reassessment under section 147 I will do. This is the provision we are going to cover in assessment procedures. Next one friends, with this we covered the topic who are liable to file the return. Next one, we are going to cover the forms who are liable to file the return over. What are the forms required? Friends, 1 to 7 forms are there. 1, 2, 3, 4, 5, 6, 7 forms are there. Now all the 7 forms we have to remember. No other option. Okay, chalo. Madam, you 5 spelling. F5VE, F5RM form. ITR 5 form, partnership. ITR 6 company spelling C O. Are able to find something? What? 6 company. ITR 6 company. ITR 5 firm. ITR 7 friend you. Lord Balaji, how many hills he has? You don't know. Lord Balaji, 7 hills. AJP, artificial judicial person. Idea number 7, AJP. 5, 6, 7, AJ. Not only AJP, others. Next one, 1, 2, 3, 4, individual and HUF. 1, 2, 3, 4, individual and HUF. 4, individual and HUF who are having presumptive income. Come again, what income? Presumptive income. What is presumptive income? To be covered in PGBB chapter. Presumptive income. Understood? Next one. Idea number 3. Individual or HUF having business or profession. PGBB. If any person has business or profession, idea number 3. Idea number 2. Individual or HUF having any income other than business or profession. Ma'am, you have only capital gain. Capital gain income. 1, 2, 3. Out of the 3, which one? Not 1. Only 2. Madam, you have business or portion plus capital gain. Idea number 3. You have business or portion plus capital gain plus other sources. When you heard business or portion, automatically you can say idea number 3. Sir, you have only capital gain. Idea number 2. So, I will explain one by one point. Listen. ITR 1. Only for salaried employees. Salaried employees. Tell me how many of you want to go for job in the class? How many of you want to go for job? Our friend, he want to go for job at all. Tell me, is a salary income he has. That is the reason he has to file idea number 1. Provided you should not have any house property. Or maybe worst case you can have one house property. How many house properties he can have? 1. Only 1. The 2 should not claim loss from the house property. I repeat, should not claim any loss from the head house property. Sir, what is this? Salaried employee plus 1 house he has. The 2, the house don't claim any loss. The 2, he may have interest or he may have any kind of other sources. When you have a bank account, automatically you may get interest or not. Yes. The 2, your total income does not exceed 50 lakh. Then only ITR number 1. I repeat all the conditions. ITR 1 is only for individual, not for HUF. Students should get that out. Sir, you only said 1, 2, 3, 4 are applicable for individual HUF. Yes. But 1 is only for salaried employee. Who can do job? Only individual. Idea number 1. Individual having salary. Maybe 1 house property. That too no loss from our head house property. Plus you may have interest or you may have pension also. Not compulsory. Last one. Total income does not exceed 50 lakh. If all the conditions are satisfied, idea number 1. You are a salaried employee, your total income is 70 lakh. Idea number 1 or 2? 2. Ma'am, you have 4 house properties. Idea number 1 or 2? 2. You have 7 house properties. 2. You have only salary, the 2 house property loss also you have. Idea number 2. Idea number 3. Individual or HUF having business or portion. Idea number 4. Individual or HUF having presumptive income. Idea number 5. Partnership firm. Idea number 6. Company. Idea number 7. AZP. Okay. I hope now you can answer. Start. Individual HUF has business or portion. Partnership firm has business or portion. Partnership firm has business or portion. 5, not 3. When you heard partnership firm, idea number 5. Company 6. Lord Balaji AJP 7. Individual or HF having business or portion 3. Presumptive income 4. Any other income other than business or portion 2. Having income from the head salary, now house property, that too total income does not exceed 50 lakh. Idea number 1. Chalo, with this we covered who are required to file. What are the forms liable required to file? We covered. Next one, the most one, important one, due dates. When we can file. Listen. Current year is called as previous year. This year is the previous year. This year income is assessable in the assessment year. The two, this year income tax return we need to file in the next year. Means previous year return we need to file in the assessment year. But in GST not like that. In GST we need to file the return in the same month. Worst case next month we need to file. But in DT not like that. Yearly once only you have to file the return of income. Yearly once. You have to file the return of income for this year. Return of income you have to file in the next year. So previous year returns must be filed in the assessment year. My previous year 18-19, then automatic assessment year 19-20. Suppose my previous year 19-20, my assessment year 20-21. So this year return we need to file in the same year or next year? Next year. Chalo. What are the due dates? 3 due dates are there. First one, on or before 31st July. Come again, 31st July of previous year or assessment year? Assessment year. Next one, on or before 30th September of assessment year. Come again, 30th September of assessment year. Last one, on or before 30th November of assessment year. 3 due dates are there. Tell me due date number 1. July, 31st July. September, November. No need to buy hard. I will tell you the reason. Number 1. First let me complete 30th November. Who are liable to file on or before 30th November? Number 1. SSC. Who are required to furnish transfer pricing report under section 92E. Come on. Transfer pricing report under section 92E. They are required to file the return of income on or before 30th November of assessment year. Friends, listen. Transfer pricing report is related to international taxation. When you have international taxation, you have to approach the auditor. You have to find out ALP, arm's length price, and you have to obtain the certificate from the chartered accountant in form number 3CEB under section 92E. For that, it will take much time, very much time it will take. That is the reason. 1, 2, 3, 4, 5, 6, 7, 8. 8 months time as given by the lawmaker. So, on or before 30th November, you have to file one return. You have to file the return. Who are liable to file the return on the day? On or before the day? Persons who are required to file transfer pricing report. Come again. Transfer pricing report. So, the topic to be covered in that chapter. So, transfer pricing report, if you are liable to file the return, you have to file on or before 30th November. Next one. On or before 30th September. This is very popular date. 1, 2, 3, 4, 5, 6. After 6 months, within the 6 months, you have to file one more return. That is on or before 30th September. Who are liable to file the return before? I will tell you. Friends, transfer pricing report applicable means that people are required to file the return on or before 30th November. Who are required to file on or before 30th September. This is very interesting and important. Every company, 30th September. I repeat, every company. Friends, every company is required to get audited their books. You are a company means audit compulsory. Which audit? Company audit. If you are a company audit compulsory. When company audit compulsory, auditor has to come to your office, has to verify the books, has to give audit report. It will take some time, right? That is the reason every company are required to file the return on or before 30th September. Next one. Okay, company okay. Others. Other than companies. Other than company means non-corporates. Non-corporate SSE whose books are subject to tax audit. Non-corporate SSEs whose books are subject to tax audit. Friends, if any person other than company books are subject to income tax audit applicable means you are also supposed to get audited by chartered accountant. He has to come, he has to verify, he has to give report. So much of time required, no? 30th September. Last one. Working partner. Friends, working partner or sleeping partner? Working. Not sleeping partner, working partner. Working partner of a firm, partnership firm. The partnership firm books are subject to tax audit. Friends, Sometimes partnership firm turnover exceeds 1 crore or 2 crores, depend upon the circumstances. They are supposed to get tax audited. When they are required to get audited tax audit, automatically working partner of a partnership firm, that partnership firm will get the salary based on profits. If you know firm profits, then only I know working partner's profit, because working partner generally will get the salary based on percentage of profits. In such case, unless otherwise you know the income of firm, we don't know income of partner. So means it will take much time to discuss, much time to file the return. That is the reason. Working partner of a firm, where the firm books are subject to tax audit. Come again. Firm books are subject to tax audit. They are liable to file the return on or before 30th September. Friends, all other persons, see the word, all other persons, they are liable to file the on or before 31st July. Don't worry. I will ask the question. Tell me, ma'am, every company required to file return or not? What is the form? 6. Idea number 6. Madam, what is the date? Audit applicable? Yes. 30th September. You, same company required to file TP report because they have international transactions. Then September or November? November. Simple. Madam, you, non-corporate associate means other than company. One partnership firm required to file the return? Yes. Every firm required. Idea number 5. Very good. Idea number 5. Firm 5. What is the due date? Simple. Audit applicable? Yes. Then 30th September. Audit not applicable? 31st July. Yes sir, no? Sir, your income is 400 lakhs, 4 crores. You are a business person. I am telling you, your books are subject to tax audit. Now tell me, are you liable to file the return? Yes. When? 30th September. Very good. Ma'am, you are a school teacher. Your salary 10 lakhs. Are you liable to file the return? Yes. Idea number 1. Salaried employee. What is the due date? On or before 31st July. Clear, huh? With this, we're done with the topic called as who are liable to file the return. What are the forms? When they are liable to file the returns completed. Okay. Any doubts? Please ask me. Any doubt about this topic? Any doubt? Chalo. Ready? Start. Running notes. Make a note. Persons who are liable to file RY. Section number, after index leave some gap and put the heading section 139 subsection 1. 139 subsection 1. Start in the new page better. Voluntary filing of RY. Voluntary filing of RY. Return of income. Return of income. Voluntary filing of RY. Return of income. Under that, Roman number 1. Persons liable to file return of income. Persons liable to file return of income. Return of income. Who are liable to file return of income? Friends, 3 branches. 3 branches. First branch, every company. First branch, every company or partnership firm. Every company or partnership firm / LLP. What is LLP? Limited liability partnership firm. First branch only, every company, every firm, every LLP. Friends, irrespective of their income, irrespective of the loss, they are liable. In brackets, right? Irrespective of income or loss. Irrespective of income or loss. Stop. Over. Second branch. In case of others, down arrow. Gross total income of SSC. Gross total income of SSC exceeds basic exemption limit. Exceeds basic exemption limit. That is 2 lakh 50, 3 lakh, 5 lakh. No need to write basic exemption limit. Tell me, in the class students, you are covered under which category? Roman number 1 or 2 or 3? 2 or 3. You have assets outside India, then also you have to file the return. Next one. Third one. RBOR, resident but ordinary resident. Resident. Two sub branches. First branch holds as a beneficial owner of any asset. Holds as a beneficial owner of any asset. In brackets, including foreign asset. Being foreign asset being financial interest. Including foreign asset being financial interest. Bracket close. Slash has signing authority. Which is signing authority of any bank account. Located outside India. Signing authority of any bank account located outside India. Over. Next number, beneficiary. Second one, beneficiary. Friends, both are liable to file or anyone? Who is the first one? Beneficial owner. Beneficiary. Beneficiary of any asset. Located outside India. Including financial interest. Beneficiary of any asset located outside India, including financial asset. Friends, tell me, if anybody not file the return, even though their income is more than basic exemption limit, or if any person not file the return, even though he has assets located outside India, automatically it is deemed to be income escaped the assessment. Next one. Who is the beneficial owner? Who is the beneficiary? Separate heading. Beneficial owner. Friends, beneficial owner means individual or company? Only individual. Make a note. Individual who has provided directly or indirectly consideration for the asset for immediate benefit or future benefit. Immediate or future benefit of himself or others. Ma'am, if you made for himself, who is the owner? Himself. Who is the beneficiary? Himself. Both are himself only, no? Himself or others. Next topic. Beneficiary. Individual who derives benefit from asset during the previous year. Who derives the benefit from an asset during the previous year. But consideration paid or not paid? Consideration beneficiary has paid or beneficial owner has paid? Beneficial owner, not beneficiary. But consideration for such asset has not been paid. But consideration for such an asset has not been made. Has not been made. Over. Chalo, next topic, forms. What are the forms? Forms are known as ITR, income tax return. In GST, the forms are GSTR, GST returns. Here ITR, income tax return. Make a note. ITR 1. Put the heading ITR particulars. Two columns I want. First one ITR, second one is the particulars. Under ITR, start. Number one, individual. Being salaried employee. Individual being salaried employee. Salaried employee has only one house property. Has only one house property. Only one house property. And does not has loss. And does not has loss. Loss from such an house property. And total income not exceeding 50 lakhs. And total income does not exceed 50 lakh. Total income does not exceed 50 lakh. Next. Idea 2. Tell me friends. 2. For whom it is applicable? Individual or HEF. Having individual or HEF having any income other than business or profession. Any income other than business or profession. Any income other than BP, business or profession. Next. Number 3. Idea number 3. What friends? Individual slash HEF having. Individuals are HEF having. Individual slash HEF having income from business or profession. Income from business or profession. Idea number 4. Individual slash HEF having presumptive income. Individual slash HEF having presumptive income. Covered under section 44 AE, AD, ADA. Covered under section 44 AE, AD, ADA. 44 AE, 44 AD, 44 ADA. Idea number 5. Partnership firm slash others. Partnership firm slash others. Generally AOP, BOI, these kind of persons also covered. Idea 6. Company. Company. Idea 6. Company. Company. 6. Company. 7. AJP. Artificial Judicial Person. Friends, not only that, charitable trust, political party, media, trade unions, all the people ITR number 7 only. Make a note. Artificial Judicial Person slash others. Chalo. Over. Last one. Due date. Due date. Due date. What is the month now? July. What is the date? How many days are there? We need to file the return. September month auditor does not have any free time because they have to file the returns of income of so many corporate SSC, tax audit persons. Correct now? Chalo, ready. Start. Due dates. 3 branches I want. 3 branches. 3 branches. First branch. First one. On or before 31st July. On or before 31st July of assessment year. 31st July of assessment year. Second one. On or before 30th September of assessment year. 30th September of assessment year. Last one. On or before 30th November of assessment year. 30th November of assessment year. November of assessment year. Tell me now. 30th November first. Anyone? For whom it is applicable? SSE who are required to file transfer pricing report under section 92E of Income Tax Act. Ready? Last branch first. Last branch. Down arrow. SSE who is required to furnish TP, transfer pricing report. SSE who is required to furnish transfer pricing report under section 92E, under section 92E, capital E of Income Tax Act. Please remember transfer pricing report. Underline the word TP report. TP, transfer pricing. Next, 30th September. 30th September, very, very important. 30th September. Small a, every company. Small b, non-corporate SSE. Non-corporate SSE whose books are subject to tax audit. Whose books are subject to tax audit under section 44 AB. Under section 44 AB. Underline tax audit. Tax audit. If tax audit applicable, 30th September. Last one. Working partner of a firm. Second branch, third pointer. Working partner of a firm. Firm. Where the firm books are subject to tax audit. Where the partnership firm books are subject to tax audit. Under section 44 AB. Section 44 AB. AB. 44 AB. Friends, whose books are subject to tax audit? Firm or partner? Firm book, not partner's book. Very good. Last one. On or before 31st July. What is the answer? Others. Others. Any others. Any other. All other persons other than these two. Chalo. Next topic, friends. Consequences for late filing of return, non-filing of return. Generally, some SSEs will ask us, sorry, I have not filed the return, what happened? If I file the return lately, what happened? This is the question. Friends, in case of late filing or non-filing, the consequences are as follows. Number one, late filing of return. Listen, late filing of return. You have not filed the return in time. You file the return afterwards. What is the answer? Example, I will tell you. So, first one is our assessment year, our previous year 18-19. Ma'am, what is the time limit for filing of late return? What is the time limit for filing of return first? 30th September or 31st July. Let us assume 30th September. Okay, na sir? Friends, you file the return in December. December. Is it correct return or late return? Late return. So, what are the consequences? Consequence number one. Interest under section 234A. I repeat, interest under section 234A. Every SSE compulsory has to file the return. Otherwise, if you make late payment of return, late filing of return, compulsory you have to pay interest. That is the reason it is called as mandatory interest. Come again. 234A interest is known as mandatory interest. Nobody can waive the interest. The interest is by default compulsory. Compulsory you have to pay the interest under section 234A. How much? 1%. 1% per month or part of the month. Part of month. Friends, I told you in my example, instead of September, you filed in the month of December. How many months late? October, November, December 1st only you filed. Still, one day also will be treated as 1 month. Total how many months? 3 months. For 3 months, 1%. Into 3, 3%. Into outstanding tax liability. How much is your tax liability pending amount, outstanding amount? That amount into interest. but everybody has to pay this interest. How much is the interest here? 1% per month, 12% per annum. Yes or no? So you can suggest your clients, if you file the return belatedly, you have to pay 1% interest. Means you have to pay 12% interest per annum. Understood? Chalo, next question. Certain deductions you cannot claim. Friends, deductions are three types: income based, expenditure based, special nature. You cannot claim deduction under 80 IA, IB, IC, ID, IE. You cannot claim IAB. These kind of deductions you cannot claim. You cannot claim profit linked deduction covered under IA, IB, IC, ID, IE, IAB. These deductions you cannot claim if you file the return lately. Correct? No? If you want to claim these deductions, file your income tax return within the time. Number next, cannot carry forward of losses. Friends, you got the loss. You got the loss. How do I know that you got the loss? You have to intimate? No. How to intimate? Through WhatsApp message? No. You have to file the return of income. That too, the return of income must be filed within the time limit. Otherwise, you cannot claim. You cannot carry forward the losses. Already in set off and carry forward of chapter, I told you, filing of return is mandatory. Correct? No. If anybody file that return lately, you cannot carry forward of losses. No doubt. Two exceptions I told you. Number one, house property. Number two, unabsorbed depreciation. Exceptions. Come and tell me, what is the first exception? House property loss. Second one is unabsorbed depreciation. Unabsorbed depreciation. Chalo, this is the topic. Cannot carry forward of losses. Number next, late fees. Friends, late fees shall be levied. How much? 5,000 rupees or 10,000 rupees, as the case may be. Sometimes 5,000, sometimes 10,000. When it is 5, when it is 10, I will let you know. Within a couple of minutes, I am going to cover. Come and tell me. Late filing of return of income. What is the answer? Number one, interest under section 234A. Number two, cannot claim deductions. Number three, cannot carry forward of losses. Which losses? All losses. But you cannot carry forward other losses. But two losses, even though late filing, you can carry forward. House property loss, unabsorbed depreciation. Number next, late fees. Come again, what? Late fees. Late fees. We can. Next one, non-filing of return. Come again, non-filing of return. Common sense, ma'am. Where consequences will be severe? Late filing or non-filing? Non-filing. In my earlier example, at least you filed the return in December. No, you never filed the return at all. Time already over. You have not filed the return at all. In this case, that is called as non-filing of return. Consequences. Number one, interest shall be levied under section 234A. Same consequence. How much is the interest? 1% per month or part of the month. 1% per month or part of the month. It is known as what interest, friends? Mandatory interest. Next one. Cannot claim deduction. What deduction? Profit linked deduction. May know profit linked deduction. What are the deductions covered? AD, IA, IB, IC, ID, IE, IAB. Very good. Next one. Cannot carry forward of losses. Come again. Cannot carry forward of losses. But two losses you can carry forward. House property loss, unabsorbed depreciation. Clear? Same. Whatever you covered here. Next one. Late fees. Ma'am, how much is the late fees under 234F? 5,000 or 10,000. Depends. I'll let you know. Extra points. Best judgment assessment. I repeat. Best judgment assessment. I will tell you. Ma'am, you have not filed the return. But what I need to do when you have not filed the return, I need to do assessment. How I can do the assessment without filing of your return? Without your exam answer sheet, how I can answer? How I can evaluate your paper? I cannot evaluate, no. Same way, without your return, you not file the return. How I can say your tax is this much? I cannot say. That is the reason government has introduced one concept called as 144 best judgment assessment. Whatever I feel best, what I feel it is confirmed, it is fit for the transaction. That amount of tax I will assess. This is called as 144 best judgment assessment. Come again. Best judgment assessment. Imagine Without your return, I am making the assessment means I will use some guesswork or not. Yes, automatically, generally, assessing officer will pass the order in favor of department only, no? So that is the punishment I will do. You have to file the return in time. Otherwise, late filing consequences are different. In case of late filing, consequences I told you. Interest under section 234A. Number 2, cannot claim profit linked deductions. Number 3, cannot carry forward of losses. Number 4, late fees under section 234F. Now consequences are in case of non-filing apart from 4. Next one, 144. What is 144? Best judgment assessment. Next, 276cc, prosecution. Prosecution, friends, for you, free boarding and lodging. For boys, white color shirt, white color, not pant, knicker. For girls, white color saree will be given. Tight security. Without your permission, you cannot. You have to take your appointment. If anybody want to meet you, they have to take your appointment. Imprisoned. Okay, fine. Prosecution. Number 1. What is the prosecution? Friends, what is your hostel fees? Year hostel fees. Our friend, she is telling 3,000. Our friend, she thought like that. My tax liability 3,000. I don't want to pay 3,000 tax. I don't want to pay. Then what is the use? I will go to jail happily. I will stay there. You cannot. The reason as simple as that. In case of outstanding tax liability up to 3,000 rupees, no prosecution. No prosecution. Above 3,000 rupees up to 25 lakh, 3 months to 2 years. I repeat, 3 months to 2 years. Your tax liability is about 25 lakh, 6 months to 7 years. 6 months to 7 years. One by one. You have to pay tax of 2,000, no imprisonment. You have to pay tax of 3,500. Yes. How much? 3 months to 2 years. Up to 3,000, no imprisonment. 3,000 above up to 25 lakh. 3 months to 2 years. Above 25 lakh, 6 months to 7 years. Clear? This is the imprisonment. You have not paid 24 lakh. Then what is the imprisonment? You have not filed the return and you have not paid the tax. 3 months to 2 years. How much? 2 years. Ma'am, you have not paid 24 crores. How many years? Maybe 6 months also possible. This is depend upon intention of the mind. This is based on cruelty. Intentionally she has not paid 24 lakh. Then 2 years. But because of some reasons she cannot file. Then 6 months. Depends. Okay. So friends, this is the time period. How to memorize? 3 zeros are 0. 3 ones are 3 twos are 6. Remember like this. Up to 3,000, 0. 3,000 above up to 25 lakh, 3 months to 2 years. Above 25 lakh, 6 months to 7 years. This is the prosecution. Apart from all the penalties, late fees, you are subject to imprisonment under section 276 C's. That's it. Next one. What is the late fees? Under section 234F. Number 1. What is our previous year? 1819. What is the assessment year? 1920. What is the due date? First due date? 31st July. What is the next due date? 30th September. What is the last due date? 30th November. My point is, what is the last day of the year? 31st March 2020. Listen. In my case, 30th September is the answer. Any person filed within that time, then there is no imprisonment. There is no prosecution. There is nothing. Suppose if the person filed the return after 30th September, then it is called as late return. For that, the fine is 5,000 rupees, provided you have to file before December 31st to December of assessment year. If you file late only, but 31st December before. Actually, your due date is 30th September, but you filed after 30th September, but before 31st December. Then late fees how much? 5,000. Reverse. You file the return after 31st December, but before 31st March. Before 31st March or after 31st December, then your penalty is late fees is 10,000. Before December, 5,000. After December, 10,000. Note: if your total income not exceeding 5 lakh, total income does not exceed 5 lakh, then friends, answer 1,000 rupees. How much? 1,000. Your total income does not exceed how much? 5 lakh. Then you have to pay the penalty late fees of rupees how much? 1,000. Okay na? Chalo. This is the late fees. Tell me friends, after due date but before 31st March, what is the answer? Right. After 31st December, then what is the answer? 10,000. Suppose your total income itself not exceeding 5 lakh during the year, then 5,000, 10,000 is somehow higher amount. That is the reason. Any case, government want to charge only 1,000. This is the late fees. Tell me now consequences for filing of return, late filing of return, non-filing. First one, interest. Cannot claim the profit linked deduction, cannot carry for the losses, late fees. Whereas other cases, interest, cannot claim deduction, cannot carry forward, late fees, best judgment assessment, and prosecution under section 276 CC. Please copy. Everyone copy this one. Take our notes, landscape and copy. Landscape and copy. Non-filing of return. Non-filing of return. No return. Second branch. Non-filing of return. Copy. Non-filing of return. Interest under section 234A. Cannot claim profit linked deductions and cannot carry forward of losses. Late fees levied under section 234F. 234A. 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 144 Best Judgment Assessment. 276 CC Prosecution. Copy the prosecution also. Outstanding tax liability one side, another side period of period. Outstanding tax liability period. If tax liability is up to 3,000, 0. Tax liability of rupees 3,000, 0. 3,000 to 25 lakhs. 3 months to minimum 3 months, maximum 2 years. Next. 25 lakhs above. 6 months to 7 years. 6 months to 7 years. 6 months to 7 years. Every return must be properly signed and authorized, authenticated by the authorized persons as specified under section 140. Otherwise, that is treated as invalid return. That return is void ab initio. Okay. If I give the check without signature, how it is check is valid? Invalid. Same way, if you give the return, if you file the return without proper authorization or proper signature, proper verification, then that is called as invalid return. That return will be treated as void ab initio. So who has to sign? I will ask you the questions. Tell me. Point number 1. Individual. Manish bhai. You. Your return who can sign? Very good. Our friend, you can only sign. Suppose you are in Erragadda hospital. Mentally retarded. Who can sign? You cannot sign, obviously. Who can sign in case of SSE? Mentally retarded. Not authorized person. Because authorized person no more. How we can give authorization if he is a mentally retarded? So, legal guardian can sign. I repeat, legal guardian can sign. Chalo. If no legal guardian, some other legal guardians can sign. Next question. If the person is outside India, I repeat, our friend Manish boy, for lunch purpose he went to outside India. Then who can sign? Answer, yes. Power of attorney. I repeat, power of attorney holder can sign. So conclusion. Answer, our friend has to sign. If he is unable to sign because he is out of country, not out of state, out of town, out of country, in this case his power of attorney holder can sign. Suppose our friend is mentally retarded, his children or wife or father or mother, legal guardian can sign. This is the point number 1 as far as individual is concerned. So, your return you have to sign. If not, your legal guardian or authorized person has to sign. Next one. Next topic. Surprising topic. HEF. Everybody. I know your first answer. Who can sign? Karta. Very good. This is common. But your examiner favorite question. If Karta is outside India, who can sign? If Karta is outside India, who can sign? Don't worry, here multiple choice option also there. Okay, small a. Next member can sign. Adult member can sign. Next B. Next adult male member can sign. Next male member can sign. Next any male member can sign. Next D. Any adult member can sign. Next E. Any member can sign. You can send the SMS also. Okay. Chalo. Ready? Tell me. A or B or C or D or E. A or B or C or D. Voting. Next adult member. Raise your hands. Only 1, 2, 3. Very good. 4, 5, 6. Very good. Very good. Next adult male. Next adult male. Okay. Male person only raise the hands. Any male member can sign. Any male. Any adult member can sign. 1, 2, 3, 4, 5, 6, 7, 8, 9. Any member can sign. Very good. Means minor also can sign in your meaning. That means minor also can sign. Answer wrong, 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 wrong. Any adult member can sign. Half ticket cannot sign. Minor cannot sign. Next one. Babu, there is no discrimination between male and female. When anyone asks you about male or female in income tax, say that discrimination is not there. Automatically, relative definition male female discrimination is there. Mr. X, opposite side Mrs. X only, not Mr. Y or something. Moral of the story as far as HF is concerned, Karta has to sign. If Karta is unable to sign, any adult member can sign. I repeat, any adult member. Very important. Adult member can sign. Chalo. I never told you male member, adult member. Your examiner favorite question. Take care. Next question. Next topic is as follows. Partnership firm. Who can sign? Managing partner can sign. If managing partner is outside India, who can sign? If managing partner is outside India, any partner can sign except minor. I repeat, except minor. Minor partner cannot sign. So any partner can sign except minor partner. Okay? Any partner. Sleeping partner can sign. Ask him to get up. He will get up and sign and sleep again. So any partner. Next number is the important topic for your exam. Company. Ready? Start. Company who can sign? Answer. MD can sign. MD is outside India. MD is outside India. Who can sign? Answer. Any director can sign. Minor director can sign. Question itself wrong. Minor cannot become shareholder. How minor can become a director? No. Next one. Government company who can sign? Government company who can sign? As far as government company is concerned, principal officer can sign. I will tell you the best example. In Hyderabad outskirts, one company, one organization is there, DRDO. One day I took the seminar there. Next to this building, BDL is there, Bharat Dynamic Limited. Abdul Kalam worked in this premises, DRDO. Now they only what you call R&D carrying on Nag, Akash missiles. The missiles what they invented there, what they developed there will be manufactured in BDL, Bharat Dynamic Limited. Tell me now in India as of now, who can manufacture all this? BDL only can defense. Bharat Dynamic Limited only can manufacture. You and me, private organization cannot manufacture. Who is the head of the company? You know, one military officer is the head of the company. He is the director for your info. He has 1 or 2 shares, I think so, in the company. Balance shares only government of India only has. Tell me, in case of government company, MD or D may not be there. Who can sign? Principal officer as authorized by the government can sign. Next number, next other topic is there, liquidation. Companies in liquidation, who can sign? In companies in liquidation, the person who is appointed as a liquidator can sign. Suppose Sachin Computers is sinking, is in liquidation, the liquidator can sign. Now last year amendment, important amendment. One company made an application for corporate insolvency. Application has filed. Then who can sign? Answer. Appropriate authority or authority authorized by the or appointed by the adjudicating authority can. I repeat. Person appointed by whom? Adjudicating authority can. When? In case of companies which made application for what? Corporate insolvency petition or application. In this case, particular authority notified by AA. AA means can sign. Next number, tell me. Who can sign in case of AOP and BY? As far as AOP and BY is concerned, any member can sign. Come again. Any member can sign. So, any member. Next one. In case of political party, who can sign? Tell me. Your political party. As far as political party is concerned, CEO can sign. Chief Executive Officer. Next number. In case of charitable trust is concerned, who can sign? Generally, any trustee or any member can sign. If not, principal officer also can sign. I repeat what? Principal officer. Principal officer means the officer who is authorized to do. AJP, Lord Balaji Temple, or Jesus Church, or Mosque Masjid? Who can sign? Answer, Principal Officer. For your info, if you go to Tirumal Tirupati Devasthanam Tirupati, now there one person will be there who is the in charge for all the things administration issue. IAS officer will be there. That person can sign. In case of local authority, who can sign? India adopted one concept. In India, for every sector, two members will be there for sure. One is politician, and second member is IAS or IPS. The best example as far as local authority is concerned, one person is there. That person is mayor, correct? Or sarpanch, president, etc. Panchayat is so politician. Opposite side, one IAS or IPS officer will be there. So here also local authority who can sign? Principal officer. Mayor cannot sign. For your info, who can sign? Principal officer. So if you don't know any other cases, you can say any member can sign or who can sign? Principal officer. So this is the question. Okay. Now if you are not signed properly, that return is called as invalid return. See the word. Persons authorized for verification of the return under section 140. Number 1. Individual. Presented in India. Himself. Absent in India. Person authorized by himself. Power of attorney holder. Mentally retarded. Now legal guardian. I know some people doubt if he is a mentally retarded, how he will have the income. Answer also you know. Mental retardation is not an obstacle for earning the money. Yes or no? Maybe he has house powered income or he is acting in cinemas also somewhere. Next number, HEF. Who can sign? Karta. Next one, HEF. Karta is outside India. What is the answer? Any adult member can sign. I never told you male, I never told you female, any member. In case of company, MD. MD not any director. Company is a non-resident, not a resident in India, non-resident. Holder of power of attorney holder. Company is in liquidation, liquidator. Company application for corporate insolvency resolution. He is admitted by the admitted. Then insolvency professional. Raja, I never told you professional who became insolvent. I told you insolvent professional appointed by adjudicating authority. Management taken over by government. Government company. CEO. Principal officer can sign. Next one. Partnership firm. Who can sign? Managing partner. No managing partner. Any partner other than minus. Not covered. LLP. Designated partners. If designated partner is not in India, any partner. Next one. Local authority. Principal officer. Political party. CEO. AOP. Any member or principal officer. Any other person. Any member or principal officer as the case may be. Correct, friends? Unverified return is a dash. Void ab initio. If return is not verified as per provisions of 140, then such return is void ab initio. You filed or not filed? If you file the return without proper verification and proper signature, then that is treated as return filed or failed. Failed. Then which consequences are applicable? Late filing or non-filing? Free boarding and lodging also will be given or not? Yes. Enjoy. Correct? Chalo. So, LLP. In case of LLP, who can sign? Designated partners. Actually, there are two designated partners will be there. Such partner has to sign the return. Okay? Chalo. With this, we cover the topic called as section 140. What is that? Signing and verification authorities. Come on. Take your notes. Right. Not landscape. Portrait will do. Note it down. Section 140. Signing and verification authority. Chalo. Fast. Individual. Individual. Who can sign? Himself. Himself. Herself also. Individual. Note it down, please. Next one. Individual is absent from India or outside India. Individual is outside India. Individual is outside India. Who can sign? Power of attorney holder. Power of attorney holder. Next one. Individual is mentally retarded. Mind gone. Individual is mentally retarded. Who can sign? Legal guardian. Next, last. Next topic. Leave one line space. HEF. HEF. Hindu undivided family. Who can sign? Karta. Hyphen Karta. Female member can be a Karta? Yes. Next one. If Karta is outside India, if Karta is outside India, who can sign? Any adult member can sign. Any adult member can sign. Next. Company. Next heading, company. Next heading, company. Who can sign? MD can sign. MD. Managing Director can sign. MD can sign. If MD is outside India, who can sign? Any other director can sign. Any other director can sign. Next. Non-resident company. Company whose poem is outside India. Non-resident. Foreign company. Non-resident company. Generally, non-resident company. Who can sign? Power of attorney holder. Power of attorney holder. Next. Company is in liquidation. Company is in liquidation. Who can sign? Liquidator can sign. Liquidator. Next. Company's application for important topic. Star mark. Company application for corporate insolvency resolution. Corporate insolvency resolution has been admitted. Corporate insolvency resolution has been admitted. Then who? Insolvency professional appointed by whom? Adjudicating authority. Adjudicating authority. Next. Government companies. Who can sign? Principal officer can sign. Principal officer. Next, it is time for partnership form. In case of partnership form, who can sign? Any managing partner can sign. How many managing partner will be there? One. Managing partner can sign. Managing partner can sign. If managing partner is outside India, any other partner can sign except minor. Any other partner can sign except minor partner. Sleeping partner can sign. Nominal partner. Very good. Next, LLP. LLP, limited liability partnership form. Star mark, important. Designated partner can sign. I repeat, designated partner can sign. Designated partner can sign. Everybody, if designated partner is outside India, any other partner can sign. If designated partner is outside India, any other partner can sign. What about minor? For your info, LLP Act does not discuss anything about minor partner. It never ever discussed. So in this case, what we can do, when the absence of the particular provision, we can take the provisions for the partnership form we can borrow. Based on that, minor partner in a LLP cannot sign. But actually, LLP Act is silent about the minor partner. Next, local authority. Who can sign? Principal officer can sign. Local authority, principal officer. Maybe IAS or IPS, who is authorized by the government, such officer can sign, but not the politician. Political party, who? CEO. CEO, Chief Executive Officer, whose name registered with the EC, Election Commission, that person has to sign. EC, Election Commission. CEO, Chief Executive Officer. Next, AOP, Association of Persons. Who can sign? Who can sign? Any member can sign, or principal officer. Any member or principal officer. Next, any other case like trust. Who can sign? Any member or principal officer. Any member or principal officer. Chalo. Anybody please tell me. Now unverified return is valid or void? Void ab initio. Then what consequences are applicable? Late filing or non-filing? Make a note. If return is not properly verified, note it down. If the return is not properly verified, return is not properly verified, slash not verified at all, slash not properly verified, slash not verified at all, slash not signed by authorized personnel, slash not signed by the authorized personnel, then such return is treated as, come on chalo, what is the answer? Valid return or invalid return? Such return is treated as invalid return. It is void ab initio. It is void from the beginning, from the initial stage, from the inception itself, void ab initio. Full stop. Tell me, which consequences are applicable? Late filing or non-filing? Then it is deemed that, come on, what? The return has not furnished. As per the provisions of section 139 subsection 1, As per the provisions of section 139 subsection 1, the return has not furnished as per the provisions of section 139 subsection 1. Please stop. Tell me, which consequences are applicable? Later, Nana. Make a note. Then the consequences for late filing or non-filing. Consequences for non-filing of return shall applicable. Consequences for non-filing of return shall applicable. Non-filing of return shall be applicable. Full stop. With this, done with the topic called as 139, 1, 140. After that, other sections also we covered. 234A, 234F, 144, 276CC. These are the sections we covered. Okay, fine. So, apart from this subject, please tell me, just casual discussion, virtual student also can say, how to become multi-millionaires. How to become multi-billionaires. Someone said marry the daughter of a billionaire, he said. Very good. But not possible for all. That is possible only in Telugu or Tamil cinema hero. Reality no. Next. Startup. Oh. Start one is startup. I think it is also possible in Maharshi cinema only. Wherever he goes, success follows. Okay, chalo. Startup only. But in startup also one limit is there. Not beyond that. Anybody? Anymore? Shares. Solutions for politicians. Very good. So, our friend Bharati said politics. Now tell me, Bhargav, if you want to start politics, if you want to start political party today, who will cast the vote? Your neighbors also may not cast. Yes or no? First you should get name and fame. Correct? Huh? What to do? Charitable trust. First everyone, start one charitable trust. Do charity. Automatically you will get some name and fame. After that start political party. But compulsory media support must be there. Self-dabba purpose, you must have media. One more. Once you enter into politics, first 5 years you may get the power. Next 5 years, Mr. Bhargav, everybody will know your target, your talent. That is the reason next time you may not come. So better start the institution you can start. Which institution? Not CA institution. Engineering or medical college kind of you can start. Which is carrying R&D you can start. R&D institutions. It will generate continuous revenue for you. I repeat, not subject. So be active. When subject starts, I let you know. You can sit like this. Okay. Chalo. Number 1, charitable trust. First start charitable trust. Number 2, political party. After that, media. After that, institution under section 35. After that, when your life is settled, already politics, you earned a lot. No need to do any more charity. The charitable trust will become pakka business trust. And so far you earn some black money or something. No. You will invest wherever possible. Investment fund you will do. Chalo. That is the topic. Okay. First 1, 2, 3, 4, 5, 6 items I told you. Number 1. Not subject. Come on. Active. Charitable trust. Political parties. Media. Institution. Business trust. Investment fund. Before camera I cannot say some names. But you know some names, okay? Some people who enter into politics, they did like this only. First in Telugu also, some people started charitable trust. After that they started political party. They entered into media also. Finally they started some kind of institution where they will get continuous revenue. Now that charitable trust became business trust. After that nowadays they are investing wherever possible. Investment funds they started. In Tamil Nadu also, one person he did like this. Charitable trust he started. After that slowly political party he started. After that he started some media related things he started. Name and fame purpose. Publicity purpose. Now he started institution. After that business trust. Investment fund. Last time I am asking you, tell me the order. Number 1. Charitable trust. Political party. Media. Institution.
business trust, investment fund. Chalo. 139 subsection 4A, 4B, 4C, 4D. Come on, correct. That's what I want. 4B, 4C, 4D, 4E, 4F. Very good. If you want to study at your end, it will take minimum 2 days. But now it will take only few minutes. Come on. 139 4A. Filing of written by charitable trust. 4B. Filing of written by political party. 4C. Filing of written by media. 4D. Filing of written by institution. 4E. Filing of written by business trust. 4F. Filing of written by investment fund. ITR number. ITR number I don't know. If I don't know, 77777. Due date. I don't know. If you don't know, if audit applicable. I repeat, if audit is applicable. Come on, what is the answer? Answer 30th September of relevant assessment year. Same answer. Next one. If audit is not applicable, no audit. Then what is the answer? 30th, 31st July. 31st July of this year or next year? Next year. Generally same answer. Last one what you have to read? Penalty. Penalty how much? 272A. If not filed the return by this trust, 272A. Here 271F. Here 272A. Here 271F. Wow. Repeat. Correct? 272A, 271F. 272A, 271. But last two, nothing is given. So 272A, 271F. 271F. Tell me, ma, what is the penalty? 272A, 271F. 272A, 271F. 271F, 270. Really, if you want to study this entire topic, it will take minimum 4-5 hours. Now you can answer, you will answer. Okay, chalo. We'll check one by one. First one, 139 subsection 4A. Filing of written by whom? Charitable trust. Now, 139 subsection 4A. First you should get one clarity. What? These charitable trusts not required to file the return of income as per the provisions of 139 subsection 1. So, special provision for filing of return of income by charitable trust or religious trust. Total income before claiming. Wait. Total 4 exemptions are there. 10, 11, 12, 13. But charitable trust, what are the exemptions applicable? 11 and 12. Any charitable trust, total income before claiming exemption under section 11 and 12 means gross receipts before claiming the exemptions exceeds bell. What is the bell? As of now, 2,50,000. Compulsory, the trust has to file the return of income. Understood? Chalo. Next question. But one secret. It is mandatory to file ROI within the due date to claim exemption. But one thing for sure, if you want to claim exemption, compulsory you have to file the return. Okay na? Anyhow, I would like to tell you one thing. Charitable trust required to file the return or not? If you want to claim the exemption, compulsory you have to file the return. Now, if especially charitable trust whose total income before claiming exemption under section 11 and 12 exceeds bell, then audit. Due date. Answer. Audit applicable? Yes. Sometimes applicable. If audit applicable, what is the answer? 30th September of assessment year. No audit is applicable. What is the answer? If no audit is applicable, 31st July of assessment year. Next one. IDR number 7. Next one. Signing authorities. Who are the signing authorities under section 140? Wait. I will tell you one clue. Except political party. Everywhere you can say principal officer. Correct? No? Yes. Who can sign? Any member or principal officer. Next number. ITR number 7. Penalty. Don't say 271F. Special provision is there. What? 272A. Answer. Rupees 100 per day of default. Rupees 100 per day of default. Chalo. If you make 1 day late, 100 rupees. 2 days, 200 rupees. Like this. 100 rupees per day of default. Chalo, this is the provision as far as assessment of filing of return by charitable trust or charitable institution. 139 subsection 4A. So first concentrate on this. Charitable trust come under 139.1 or 139.4A. Special provisions are applicable. Every trust has to file the return? No. Those trusts whose total income before claiming exemption under section 11 and 12 exceeds basic exemption limit of 2,50,000. If audit applicable, yes, 30th September. Not applicable, 31st July. Signing authority, principal officer. Due date, already covered. ITR number 7. Penalty, 272A. Rupees 100 per day of default. Okay, I know your doubt. 271F or 272A? That is the question. Answer, for 139 4A, penalty 272A. A for A. Understood? Yes. Not only subject, memory also important. Correct? No? Yes. I told you 270 days special provision applicable for trust. You understood. But in exam you have to present. For that purpose you cannot do some kind of nonsense. That is the reason I am telling. A for A. So start 272 A. Chalo. How much is the penalty? 100 rupees for a day of default. So last section for today's class. Political party. Our friend Bhargav, he started charitable trust. Now we got name and fame. Name and fame. So everybody is telling he is a Father Teresa. Okay. Nominated for Nobel Prize also. But just miss. Now today, our friend he wanted to start political party. Special provisions applicable for filing of return of income by whom? Political party. Number 1. Total income before claiming exemption under section 13 capital A exceeds the basic exemption limit. Chalo, how much? 2,50,000. So, but one thing for sure, in this chapter already I explained. While explaining the chapter assessment of political party, I told you ROIs must be filed within the due date. Anyhow, what is the due date? If audit is applicable, what is the due date? 30th September. No, on or before 30th September. If no audit is applicable, 31st July. On or before 31st July. ITR number 7. Penalty 271F. How much ma? 5,000 rupees. Come again, how much? 5,000. Not 272A. 271F. Signing authorities. Who can sign? Signing and verification authority under section 140. Who can sign? CEO, Chief Executive Officer. Chalo, this is the topic as far as 139. 4A, 4B is concerned. Okay na? Tell me, what is 4A? Political party. 4B, 4A, charitable trust. 4B, political party. 4C, not only media, institution, university, hospital, educational institution. Next one, fund, RPF, recognized provident fund. All the people are covered under section 139 subsection 4C. That is most important topic. Okay. D, 4D, only institution, come under 35. 35 means R&D, research and development. Student should get the doubt. What is 4C, 4D? 4C means any kind of institution which is funding by public or funded by government. That kind of organizations covered. 4D is only for those institutions which are engaged in carrying research and development. 4E, business trust. 4F, investment fund. See. Friends, yesterday's class we covered the topic 139 subsection 1, filing of return of income by individual HEF, AOP, BOI. After that we covered partnership firm and companies. Today's topic is filing of return by other persons. We are going to cover 139 subsection 4A, 4B, 4C, 4D, 4E, 4F. Today we are going to cover that special provisions called as 139 subsection 4A, 4B, 4C, 4D, 4E, 4F. Point number 1. For that purpose, I would like to tell you the memory code. This is only for memory purpose because not only concept, you should know the provision also. You should be able to write in exam hall. For that purpose, I will tell you the technique how to memorize. Point number 1. First one, how to become Karodpati, multi-millionaire. I'm not asking you to do like this, but I would like to tell you one thing. First one, you have to enter into politics. If you enter into politics, no one will catch the word. That is the reason first you can start charitable trust. Once you started charitable trust, once you get the profit, once you get the name and fame, automatically you can transfer, and you can transfer as a politician. You can start political party. Once you started political party, for your propaganda purpose, something is required. What is required? Media. So you have to start media. Once you started media, after that next one you have to start some kind of institutions for regular income purpose. Institution covered under section 35. Once you started institution under section 35, after that you can go for business trust. Come again, what? Business trust. Once you started business trust, you can start what? Investment. Keep on investing. That is called as investment fund. Chalo. This is the way. These are the provisions, different provisions. 139 subsection 4a, filing of return of income by charitable trust. 139 subsection 4b, filing of return of income by political party. 139 subsection 4c, filing of return of income by media, institutions, hospitals, educational institutions, any other recognized institutions or recognized provident fund, all the organizations covered under section 139 subsection 4c. Next number 139 subsection 4d, institutions which are covered only under section 35. 139 subsection 4e, this is related to filing of return of income by the business trust. 139 subsection 4f, filing of return by investment fund. These points we are going to cover one by one. First, it is time for 139 subsection 4a. Friends, number one, charitable trust. That is also our syllabus. Assessment of charitable trust, very important chapter. Before that, first to try to understand the topic, what is 139 subsection 4a. Friends, already we covered one chapter, one topic, 139 subsection 1. This is voluntary filing of return of income for others. I repeat, it is return of income for others. Whereas in case of charitable trust, 139 subsection 1 provisions are not applicable. Special category provisions are there. The provisions are as follows. 139 subsection 4a. Come again. 139 subsection 4a. What is that? Special provision for filing of return of income by charitable trust. Friends, not only charitable trust or charitable institutions or religious trust also covered. Filing of return of income by charitable trust. Number one, what is the condition? Number one, if total income of charitable trust before claiming exemption under section 11 and 12. Come again. Before claiming exemption under section 11 and 12. Friends, this is nothing but gross receipts. Come again. It is nothing but gross receipts. Friends, if gross receipts exceeds BEL, what is the BEL? Basic exemption limit. In this case, the particular charitable trust has to file the return of income under section 139 subsection 4a. So, special provisions for filing of return of income by charitable trust, where the charitable trust gross receipts means total income before claiming exemption under section, what is the section? 11 and 12 exceeds basic exemption limit. What is the basic exemption limit? 2,50,000 rupees. In this case, that charitable trust compulsory has to file the return of income. For that purpose, now what are the forms required? Who are required to sign? That points we are going to cover. Number one. Second point, number two, signing authorities. As far as charitable trust is concerned, principal officer, any officer, manager of the charitable trust has to sign the return of income of charitable trust. Due date. What is the due date for filing of ROI? If audit is applicable, on or before 30th September of assessment year. If no audit is applicable, on or before 31st July of the relevant assessment year. ITR number. What is ITR number? 7. Friends, other than those covered under 1 to 6, automatically come under ITR number 7. Charitable trust is required to file the return of income in ITR number 7. If they have not filed the return of income within the said due date, compulsory they have to pay the penalty under section 272A at the rate of 100 rupees per day of default. Friends, this is the topic as far as filing of return of income by charitable trust. So we can see all the points once again. What is the charitable trust? How it will be? Come and tell me, friends. Fill in the blanks. Number one, what is the provision for 139 subsection 4a? Filing of return of income by whom? Charitable trust or charitable institutions or religious trust. Tell me, what is the condition, friends? Total income before claiming exemption under section 11 and 12 exceeds basic exemption limit. Very good. ITR number 7. Next one, due date. If audit is applicable on or before 30th September of assessment year. If audit is not applicable on or before 31st July of assessment year. Next one, signing and verification authority. Under section 140, who is the person, friends? Principal officer. Authorized officer of the charitable trust has to sign the return of income. Penalty, friends, if the charitable trust has not filed the return of income within the said due date, if the charitable trust has not complied the provisions of section 139 subsection 4a, compulsory they are supposed to pay the penalty of rupees 100 per day of default under section 272a. Friends, this is the topic as far as 139 subsection 4a is concerned. Once again, I want everybody should participate in the discussion. Number 1, 139 subsection 4a, filing of return of income by the charitable trust or charitable institutions. Condition number 1, gross receipts means total income before claiming exemption under section 11 and 12 exceeds basic exemption limit. Number 2, what is the form? ITR number 7. Who are the signing authorities? Principal officer. If audit is applicable 30th September, if audit is not applicable 31st July. Next, what is the penal provisions applicable if the provisions are not complied? Penalty under section 272a. Chalo, this is the topic as far as 139 subsection 4a is concerned. Ready? Start. Everybody take your notes. Landscape. You can take your running notes in the landscape manner. Put the heading 1, 2, 3, 4, 5, 6, 7. I want total 7 columns. Do it. Take new page. Go to landscape. Keep 7 columns. First column is particulars. Second column 139 subsection 4a. Next column 139 subsection 4b. Next column 139 subsection 4c. Next column 139 subsection 4d. Next column 139 subsection 4e. Last column 139 subsection 4f. Like this, you can make the columns first. Particulars. Everyone, start the running notes. First one, proviso. Please write the provision first. Under that, write opposite to provision, filing of return of income by charitable trust or charitable institutions. Filing of return of income by charitable trust or charitable institutions. Next, under that, conditions. Tell me, friends, total income or gross receipts? You can say gross receipts exceeds basic exemption limit, you can say, or else you also can say total income before claiming exemption under section 11 and 12 exceeds basic exemption limit. Make a note. Total income before claiming exemption under section 11 and 12. 11 and 12 exceeds basic exemption limit. Next, ITR number. What is ITR? 7. ITR number 7. Not Roman number, Arabic number 7. Due date. If audit applicable 30th September. Next row, due date. If audit is applicable 30th September of assessment year. 30th September of assessment year. If no audit is applicable, 31st July of assessment year. 31st July of assessment year. Next month. Signing and verification authority, principal officer. Signing and verification authority, principal officer. Last one, friends, penalty. 272A. 272A. How much, ma? 100 rupees per day of default. Per day 100 rupees penalty. With this, done with the topic called as 139 subsection 4A. Everybody tell me, what is subsection 4A? Filing of return of income by charitable trust. What is ITR number? 7. Already start. Next one.
Political party. Recently elections completed. I hope you got the votes and you cast the voters also. I think so. No? Minors? Okay, very good. As per provisions of 139 subsection 4b, every political party has to file the return of income. The provisions are as follows. Point number 1. Total income of political party before claiming exemption under section 13 capital A. Friends, in fact there are 4 exemptions, section 10, 11, 12 as well as 13. As far as 13 is concerned, 2 subparts are there, 13 capital A and 13 capital B. 13 capital A is applicable for political party. So friends, if any political party total income before claiming exemption under section 13 capital A exceeds basic exemption limit. What is the basic exemption limit? 2,50,000. In this case, such political party has to file the return of income as per the provisions of section 139 subsection 4b. Next one. Once again, tell me what is the provision? Total income of political party before claiming exemption under section 13a exceeds basic exemption limit. Then such political party has to file the return of income. Next one, friends. But one thing for sure, if you want to claim the exemption under section 13 capital A, compulsory you are supposed to file the return of income under section 139 subsection 4a, 4b. These provisions are already we covered in the topic called as assessment of political parties. Anyhow, signing and verification authority of the political party, CEO, Chief Executive Officer. But friends, in case of charitable trust, the answer would be principal officer, whereas in case of political party, the answer would be CEO. Next one, friends. If audit is applicable on or before 30th September of the assessment year. If audit is not applicable, 31st July of assessment year. ITR number 7. Penalty. Friends, no special penalty. I repeat, no special penalty levied in case of default under section 139 subsection 4b. That is the reason general penalty only applicable. The general penalty is none other than 271F. How much, friends? 5,000. F 5,000 rupees. I repeat, in case of 139 subsection 4A, special penalty of rupees 100 per day of default applicable as per section 272A. But here no specific penalty is levied. Automatically we need to go for the general penalty. What is the penalty? 271F. So there is no specific penalty. So let us fill the columns. Everybody participate. Point number 1. In case of 139 subsection 4b, what is the provision? Filing of return of income by whom? Political party. Before claiming exemption under section 13 capital A exceeds basic exemption limit. What is ITR number? 7. What is the due date if audit is applicable? 30th September. If audit is not applicable, 31st July. What is the signing and verification authority? CEO, Chief Executive Officer. Penalty is not specific levy. That is the reason penalty under section 271F is applicable. Start the running notes. Continue the running notes, everyone. 139 subsection 4A. Completed. Now it is time for 139 subsection 4B. Filing of return of income by political party. Filing of return of income by political party. Political party. After that, please write the conditions. Total income before claiming exemption under section 13 capital A. I repeat, total income before claiming exemption under section 13 capital A exceeds basic exemption limit. Exceeds basic exemption limit. Before claiming exemption under section 13 capital A exceeds basic exemption limit. What is the ITR number? 7. ITR number 7. Next. Due date, friends. Same answer. Same to same. You can keep ditto also. If audit is applicable, 30th September. If no audit is applicable, 31st July. Who is the signing authority as per section 140? CEO, Chief Executive Officer. Penalty, no specific levy, so covered under section 271F. How much is the amount, ma? 5 rupees, 5,000 rupees in case of default of filing of return of income as per provisions of section 139 subsection 4B. Chalo. With this, done with the topic 4B. Next friends, very important topic. Many attempts they asked this question in examination. 139 subsection 4C. Very important. 5 star. See the word. All of you listen. 139 subsection 4C. Friends, now it is 139 subsection 4C. As I told you, it is very important. Special provisions are applicable for filing of ROI by hospitals or medical institutions, medical colleges, schools, colleges, other specified institutions, recognized provident fund, approved gratuity fund, or national pension fund. All the persons are covered under section 139 subsection 4C. Provisions are as follows. Conditions are as follows. If the total income, I repeat, if the total income before claiming exemption under section 10 exceeds basic exemption limit. Come again. Total income before claiming exemption under section 10 exceeds threshold limit or basic exemption limit. But for your information, in case of certain universities, in order to claim any kind of exemption, filing of return is mandatory. Means in certain cases, it is mandatory to file the return of income without considering this restriction. Even though their income is less than BEL or more than BEL is immaterial, if you want to claim the any kind of exemptions, compulsory you have to file the return of income under section 139 subsection 4C. But other organizations, this rule is applicable. If the total income of the organization before claiming exemption under section 10, what is the sections? Maybe section 10 subsection 23C or maybe section 10 subsection 23FB. Next one, section 10 subsection 23 DA. Like this, so many sections are there. Before claiming exemption under section, in general I am telling section 10 exceeds the basic exemption limit, that organization, that medical college, that university, that college has to file the return of income due date. Same friends, if audit is applicable, anybody, what is the answer friends? On or before 30th September of relevant assessment year. Friends, if no audit is applicable, then what is the answer? Answer is 31st July of the assessment year. ITR number 7. Next number, penalty 272A. How much is the amount friends? 100 rupees per day of default. This is the penalty. Okay. So we will see comparative study purpose. We will fill in the boxes. Tell me ma. 139 subsection 4C. Come on. Filing of return of income by institutions, hospitals, universities, colleges. Next number, pension fund, recognized provident fund, approved superannuation fund, or approved gratuity fund. What is the condition for filing of return? Total income before claiming exemption under section 10 exceeds BEL. What is the ITR number? 7. What is the due date? Audit applicable 30th September. Audit is not applicable 31st July. Signing and verification authority, principal officer. Next one friends, what is the penalty? 272A first one, 271F. Here what is the answer? 272A. How much is the amount friend? Rupees 100 per day of default. General penalty of 5,000 not applicable here. Please write the running notes. Start. Important topic friends. 139 subsection 4C. 4C, capital C. Filing of return of income by institutions, come on, hospitals, come on, trade unions, come on, mutual funds, etc. Many persons are covered under 139 subsection 4C, etc. Next one friends, what is the condition? Total income before claiming exemption under section 10 exceeds BEL. Total income before claiming exemption under section 10 exceeds basic exemption limit. Total income before claiming exemption under section 10 exceeds basic exemption limit. ITR number 7. Next, what is the due date if they are supposed to audit? If they are subject to audit, then due date is 30th September of assessment year. Same answer mark. If no audit is applicable, 31st July of assessment year. Who is the signing authority? Principal officer. Penalty provisions 272A. Next one, friends. Next topic. It is time for section 139 subsection 4D. Special provisions for university, colleges or institutions covered under section 35. Don't confuse. Section 139 subsection 4C deals about all institution, university, colleges, whereas 139 subsection 4D deals about the institutions which are covered under research and development. That is section number 35. So generally provisions are as follows. Generally it is mandatory to file the return of income. I repeat, mandatory to file the return of income. Next number, due date. What is the due date, friends? Audit is applicable 30th September. If audit is not applicable, 31st July of assessment year. ITR number 7. Penalty of rupees 5,000 under section 271F. So fixed amount of rupees 5,000 shall be levied if you have not filed the return of income as per the provisions of section 139 subsection 4D. So fill in the blanks in the table, friends. Number 1, 139 subsection 4D. Institution covered under section number 35. ITR number 7. Due date audit applicable 30th September. Not applicable 31st July. Now signing authority principal officer. Penalty 271F. I request you all see the word here repetition 272A 271F. 272A 271F. Chalo, write the running notes. 139 subsection 4D. 4D. Filing of return of income by institutions slash universities covered under section 35 research and development. Next, ROI is compulsory or optional? ROI is mandatory. If they are not covered under any other sections, automatically come under this category and it is mandatory to file the return of income. Mandatory. ITR number 7. Right, ITR number 7. Due date. If audit applicable, what is the answer? 30th September. If audit is not applicable, 31st July. 31st July. Signing and verification authority. Who are the persons? Principal officer. Penalty 271F. 5,000 rupees. No specific penalty. That is the reason general penalty of rupees 5,000 shall be levied. Friends, completed? Chalo. Now it is time for 139 subsection 4E. Follow, friends. Special provisions for filing of return of income by the business trust. This is our syllabus itself. Filing of return of income by business trust. Now provision. It is mandatory to file the ROI. I repeat, mandatory. Compulsory they are required to file the ROI. Due date, same, friends. 30th September or 31st July of relevant assessment year. Next one, ITR number 7. Next one, penalty covered under section 271F. Answer, rupees 5,000. Fixed sum of 5,000 rupees levied as a penalty. Signing authority is none other than principal officer. So once again, as a regular practice, fill the columns. Number 1, 139 subsection 4E. What is the provision? Filing of return of income by the business trust. Filing of return subject to any condition or mandatory? Mandatory. ITR number 7. Due dates are same. Next number, signing authority also same, principal officer. Penalty also same. What is the penalty? 271F. Please note it down. Running notes. I asked you to write in the landscape. Please continue. 139 subsection 4E. 4E. Filing of return of income by business trust. Business trust. Taxation of business trust is our syllabus itself. We are going to cover in this in detail in the particular chapter. Conditions, mandatory. No conditional filing of return is mandatory to file the return of income. Idea number 7. Due date. If audit is applicable 30th September, if not applicable 31st July. Signing and verification authority, principal officer. Penalty under section 271F rupees 5,000. Okay. Last topic, friends, of its kind, 139 subsection 4F. Special provision for filing of return of income by investment fund. Taxation of investment fund is also our syllabus. Now, here it is mandatory to file the return of income. There is no conditions at all. Every business trust and every investment fund compulsory required to file the return of income. In form number ITR 7, penalty no special provision, automatically general provision of rupees 5,000 is levied as a penalty under section 271F. Signing authority as simple as that, principal officer. Due dates also same. Okay, let us check once. Next, 139 subsection 4F. Tell me, friends, what is the provision? Filing of return of income by investment fund. Conditions are nothing. Mandatory to file the ROI. ITR number 7. Due date, friends, same answer. Here also principal officer, same answer. Here also same answer. 271F is the penalty. Okay. This is the provision as far as filing of return of income by investment fund. Please write the running notes. Last column. Last column of the particular table, you can fill it. Come on. I will dictate. Note it down. Filing of return of income by investment fund. Filing of return of income by investment fund. Provision. Conditions. Mandatory to file the return of income. Mandatory. Idea number 7. Due date. Same answer. If audit applicable 30th September, audit is not applicable 31st July. Signing and verification authority. If you observe carefully, except political party, in case of political party, that is CEO, Chief Executive Officer, rest of the topic is principal officer. The officer who has been authorized for the purpose of signing of the return of the organization is covered under section 140. Next number, penalty, 272A, 271F, 272A, 271F, 271F, 271F. So, 271F is the general penalty, whereas 272A is the special penalty. But in case of 139 subsection 4F, now general penalty of rupees 5,000 shall be levied. So, please make a note, 271F. Chalo. With this, we are done with the topic called as 139 subsection 1. After that, we cover the topic 139 subsection 4A, 4B, 4C, 4D, 4E, 4F. Okay? Chalo. Now, it is time for other sections 139 subsection 1A, 1B, 1C we are going to cover right now. These are not at all important, but as a regular syllabus, we are need to cover these points 139, 1A, 1B, 1C. Friends, next topic is section number 139 subsection 1A, bulk return, or else it is also known as filing of return through employer. For your information, here metro rail track is constructing by the Larsen & Toubro L&T company. Now here so many employees are working. For your information, all the employees' salaries are more than basic exemption limit. So we are in the July month, for example. So everybody has to file the return of income. My point, suppose 30,000 members are working on the metro rail project. All the 30,000 members went to department to file the return of income. Imagine how many members are waiting there and the resources are wasting. And next one, here also work will get delayed. Unnecessary traffic jam. So for the purpose, they introduce one beautiful concept called as filing of return through employer, or it is also called as bulk return. What is this? Number one, employer only will collect the returns from you and will file all the returns as a group. He will file with the department. He may file the returns, all your returns in a CD or in a floppy diskette also you can file. By way of hard copy or by way of soft copy also you can file. For that purpose, they introduce one concept called as 139 subsection 1a, bulk return or filing of return through employer. Friends, only salaried employee only can do. Listen, individual being salaried employee, only salaried employee may furnish. This scheme is not mandatory, this scheme is optional. So, may furnish the return of income in GSTR in ITR number 1. So, you can file the return of income through the employer. Then employer may file the same in a floppy diskette or else may file the same in a CD. To the income tax department he will file. So conclusion, first he will file the return through employer. After that employer will file the return through department, file to department. So conclusion, now these are the special provisions for filing of return through employer covered under section 139 subsection 1a. Is it mandatory or optional? Optional. Not at all mandatory, it is optional. Optional to whom? Employer or employee? Employee, not for employer. Employee, if you want, you can file voluntarily, yourself only you can file, or else you can file through the employer. Next number, it is applicable to only those organizations where minimum 50 employees, I repeat, minimum 50 employees must be there whose salary is more than 2,50,000. I repeat, at least in your organization minimum 50 employees must be there, that too their taxable income exceeds 2,50,000, then only this concept is applicable. So here some doubts I have. Doubt number 1, I need to file the return under section 139(1) or 139(1)(a), that is the question. Answer, even though you file return under section 139(1)(a), it is deemed to be filed under section 139(1). See the word, RY filed under section 139(1)(a) is deemed to be filed under section 139 subsection 1. So friends, not important topic anyhow. Please let us sum up. 139 subsection 1a, what is that? Bulk return or filing of return through employer. I repeat, employee may furnish the return to employer. Employer as a bulk, as a group, he will file the return to the department. That is the reason it is known as bulk return, and it is also known as filing of return through employer. Optional or mandatory? Optional, given to the employee. At his option he may furnish. After that employer will furnish the same to department. So that too, this is applicable to those organizations where the number of employees are 50 or more. Come on, write the running notes. Not landscape, new page, normal regular running notes. 139 subsection 1a, bulk return. 139 subsection 1a, bulk return. Bulk return or filing of return through employer. Bulk return or filing of return through employer. Filing of return through employer. Tell me friends, who can file the return? Employer or employee? Employee. Make a note. Individual being salaried employee. Individual being salaried employee. Individual being salaried employee may furnish the return of income. May furnish the return of income through the employer. Through the employer. Through the employer. Full stop. Later on, employer shall furnish bulk return. Later on, employer shall furnish the bulk return. Bulk return in a floppy diskette. Floppy diskette or second option, compact disk, CD. Compact disk, comma, to the department, to the income tax department. To the income tax department. Friends, it is mandatory or optional? Make a note. Filing of return through employer is not mandatory. Filing of return through employer is not mandatory. Full stop. Such option is given to the employees itself. Such option is given to the employees itself. Employees itself. Last number. Return filed under section 139 subsection 1A is deemed to be filed under section 139 subsection 1. Make a note. Friends, it is namesake 139 subsection 1A, but nothing but 139 1. Some people should get the doubt here. Sir, what are the due dates? Nothing. Same as 139 subsection 1. Make a note. ROI is filed under section 139 subsection 1A. ROI is filed under section 139 subsection 1A is deemed to be filed under section 139 subsection 1. Is deemed to be filed under section 139 subsection 1. Friends, now our topic is 139 subsection 1B. That is none other than electronic filing of return of income. In case of GST, it is mandatory to file the return of income only online. But as far as income tax is concerned, online filing of return is not mandatory for all SSEs. In certain cases it is mandatory, in certain cases it is optional. So to whom it is mandatory, I will discuss one by one. First one, every company, take it for granted, every company are required to file the return of income and form number GSTR number, IDR number 6. And on or before 30th September, that too they have to file the return of income electronically, every company. Next number, every non-corporate SSE whose books are subject to tax audit under section 44 AB. So, non-corporate SSE is subject to tax audit also required to file the return of income through online. Last one friends, persons, which persons? RBOR, resident but ordinary resident, having assets located outside India, including which assets? Financial asset. Including financial assets also, they are liable to file the return of income online. So I told you as of now 3 persons. Tell me the number 1, every company. Number 2, non-corporate SSE. Number 3, RBOR, resident but ordinary resident, who has assets located outside India, including financial asset or including bank interest authorized signatory also. Correct now? Yes. In the following cases, it is mandatory to file the return electronically plus digital signature also mandatory. I repeat, DSC also compulsory. But in case of individual and HUF, having total income exceeds 5 lakh, compulsory they have to mandatorily they have to file e-filing, electronic filing compulsory. But digital signature usage is not mandatory, that is optional. For your info, now for others digital signature mandatory, but in case of individual and HUF whose total income exceeds 5 lakh rupees, compulsory online filing is mandatory, but digital signature is optional. But whenever they have not used a digital signature, there is a threat of hacking and cracking. That is the reason there is a concept called as additional complaints are there. Additional complaints. Even though you filed online filing without digital signature by individual or HUF, additional complaints you have to do. First one, first option, bad option, hard copy. Within 120 days, you have to send the hard copy. Friends, if you want to send the hard copy, then what is the fun of filing e-filing, right? So that is one option. Or else you can go for OTP or Aadhaar OTP you can go for. What is the Aadhaar OTP? Aadhaar linked phone number will get the OTP, one time password. Or else you will get EVC, electronic verification code. Or else net banking. Yes, from the net banking site also you can file the return of income. So if you do additional complaints like this, in this case digital signature, even though you have not used, that will do. That's all. This is the concept called as 139 subsection 1 e-filing of return of income. Please write the running notes. 139 subsection 1b. 139 subsection 1b. E-filing of return of income. Electronic filing of return of income. Everybody, is it mandatory or optional? Optional. For all others, optional. Only these following persons, only it is mandatory. But in case of GST, not like that. In every person's case, it is mandatory to make online filing. But here, not like that. Make a note. Filing of electronic return is optional. Note it down. Please note it down, everyone. Filing of electronic return is optional. But it is mandatory in the following category persons. It is mandatory. It is mandatory in the following category persons. In the following category persons. Everyone, 2 branches. Make 2 branches. Drag 2 branches. First branch. DSC. Digital signature is mandatory. First one, DSC. Digital signature is mandatory. Mandatory. Second one, digital signature is optional. One is mandatory, one is optional. Friends, when it is mandatory, no, those people who are corporate, those people who are subject to tax audit, those people who are having foreign assets, who are having assets located outside India, in the following persons, digital signature is mandatory. Note it down. Small a, every corporate asset, every company. Small a, every company. Small b, there only, first branch only. Non-corporate assessee whose books are subject to tax audit. Non-corporate assessees whose books are subject to tax audit under section 44 AB. Under section 44 AB. Last one, friends. RBOR, resident but ordinary resident. RBOR, resident but ordinary resident having assets located outside India. Having assets located outside India. Outside India. Having assets located outside India. In brackets, financial asset also. Including financial asset. Including financial assets. Friends, when you use a digital signature, is there any chance for hacking or cracking? No. Data manipulation not possible. That is the reason additional compliances are required or not required? Not required. Make a note, down arrow, right. No additional compliances are applicable. No additional compliances are required. No additional compliances are required. Please come to the next one, last one, second branch. DSC optional. Digital signature is optional. Note it down. Individual or HUF. Individual or HUF whose total income exceeds. Whose total income exceeds rupees 5 lakh. 5 lakh. Once upon a time, long ago that was 10 lakh actually. Nowadays it is 5 lakh. Total income exceeds 5 lakh. That's it. Friends, when there is a digital signature is there, automatically I can say, yes, the data is not manipulated. When digital signature is not there, maybe some hacking or cracking, certain things may happen. That is the reason there must be additional compliances. Down arrow. If no digital signature is used, if no digital signature is used, then additional compliances are required to be made. Then additional compliances are required to be made. Additional compliances are required to be made. Small a. Hard copy. Filing of hard copy. Apart from soft, within 120 days, you have to send the hard copy also to the Bengaluru address. Make a note. Within 120 days. Second one, OTP. Aadhaar OTP. Aadhaar mobile OTP. Aadhaar OTP. Next, EVC. Electronic verification code. EVC. Electronic verification code. Next, Through net banking. Through net banking. Friends, next topic is 139 subsection 1C. Certain SSEs are not required to file the return of income. Even though they are actually covered under section 139 subsection 1, they are not required to file the return of income. For that purpose, UPA government, at the time Chidambaram sir was the finance minister, he introduced the concept 139 subsection 1C, not required to file the return of income. Whom? Only salaried employee. I hope you know, everybody in the class, they know that individual can only do this job. Individual only can have the salary income. So, individual being salaried employee, provided whose total income does not exceed 5 lakh. I repeat, does not exceed 5 lakh rupees per annum. That too, interest on savings bank account does not exceed 10,000. I repeat, does not exceed 10,000 rupees. I repeat, only savings bank account. Savings bank account only, not any other fixed deposit, not any other income. In one CA final attempt, the examiner asked that one person has only 4,80,000 is the salary income and interest on FD is 7,000 rupees. He is required to file the return of income or not? Yes, because I told you only interest on savings bank. Friends, altogether, entire interest income plus salary altogether not exceeding how much? 5 lakh. Does not exceed 5 lakh. In this case, is not required to furnish the return of income subject to following conditions. Condition number 1, he must possess the PAN. Friends, you must have the PAN number, PAN permanent account number as per income tax must be there. Number 2, you should not have any other income. You cannot have any other income except salary and interest. And total income, including salary and interest, does not exceed 5 lakh rupees, 5 lakh. And interest on savings bank account does not exceed 10,000 rupees per year, per annum. Next one, no claim of refund. You have not claimed any refund. Suppose if you are supposed to get refund, at the time compulsory you have to make the filing of return of income. Next one, no notice is received by the SSE on certain failures or certain defaults, no return has been received. And next one friends, tax TDS has been deducted under section 192. Friends, and as well as TDS certificate also received. What is the TDS certificate in case of salary employed? Form number 16. Form number 16, form TDS has received. This is the provision. Anybody in the class, what is the concept? What is the logic beyond this of this 139 subsection 4C? Very simple. Salaried employee does not have any other income, that too have interest on savings bank account. Friends, anyhow interest on savings bank account up to 10,000 is allowed as deduction under section 80 TTA. Number 1. Number 2, altogether interest and salary amount does not exceed 5 lakh. That too your employer has deducted the TDS and employer has given the form number 16. That too there is no question of refund at all and no notice also issued by government. Then unnecessarily, what is the need of filing the return again? That is the reason government has given relaxation to these employees whose all total income including interest on savings. Friends, interest on savings bank account you may have, you may not have. If you have, the individual interest does not exceed 10,000. Altogether it does not exceed 5 lakh. I will take one example. Your engineering friend is there. Now, in beginning of his career, he started with the job of rupees 2,40,000 per annum, 20,000 per month. Friends, he never ever required to file the return of income under section 139(1). Reverse. Is your friend salary, let us say 30,000 per month, 30 into 12, 3,60,000, and interest amount, let us say 9,000 per annum. Anybody in the class, tell me. Imagine he has PAN number, you don't have any other income. Now all other conditions are satisfied. Tell me now, is required to furnish ROI or not required? Not required. Actually is required to furnish ROI under section 139 subsection 1. But here, as per the provisions are concerned, 139 subsection 1C is concerned, he is not required to file the return of income. Chalo, right ma? Running notes. 139 subsection 1C. 139 subsection 1C. SSE is not required to file the return of income. SSE is not required to furnish ROI, not required to furnish ROI, return of income.
Make a note. Applicable to. Heading applicable to. Individual being salaried employee. Applicable to individual being salaried employee. Salaried employee whose total income does not exceed rupees 5 lakh. Whose total income does not exceed rupees 5 lakh. And interest on savings bank account does not exceed 10,000. And interest on savings bank account does not exceed 10,000 rupees per annum. Next. Comma is not required to furnish ROI. Is not required to furnish ROI. Under section 139 subsection 1. Under section 139 subsection 1. Subject to following conditions. Subject to following conditions. Following conditions. Tell me, first condition number 1. SSE must possess PAN, permanent account number. You must have PAN. SSE must possess PAN. Next. SSE should not have any other income. SSE should not have any other income. Next.